Explainer 16, the Federal Open Market Committee. Hi, John Rothfield with Derivative Logic. So, since 1981, the Federal Open Market Committee has met 8 times per year in the boardroom of the Eccles Building in Washington, D.C., the headquarters of the Federal Reserve's Board of Governors. These days, each meeting is 2 days long to allow for enough debate and agreement as necessary to produce a coherent statement to the public and investors on what they've decided. The participants include the 7 board members of the Fed, including the chair, and the 12 regional Fed presidents and various staff. The meeting begins with the manager of the System Open Market Account, called SOMA, at the Federal Reserve Bank of New York, reporting on how well the open market trading desk has done in hitting the current target of the federal funds rate since the last meeting, and discusses recent developments in financial and foreign exchange markets. The balance of the remainder of the 2-day FOMC meeting is a discussion of what to do with its monetary policy in light of new information at hand. Its output has evolved into 3 areas: setting its target for the federal funds rate, managing its balance sheet, and forward guidance, communicating with the public about where monetary policy will likely be in the future. Of the 19 participants in the Federal Open Market Committee, 12 formally vote on policy at each meeting. These are the 7 board members, the New York Fed president always votes, and a rotation each year of 4 of the regional Fed presidents. From Arthur Burns in the 1970s up until 2025, there have been 352 formal dissents from the committee's decisions. Although from the Greenspan Feds onwards, those dissents have averaged less than 1 per 2 meetings, including just 1 per 3 meetings under Fed Chair Jay Powell over the last 8 years. Since the days when Fed Chair Greenspan tended to run the committee with a degree of opacity and personal discretion, the Fed has come to acknowledge that transparency was a win-win for them and market participants. From 2000, the Fed began releasing a statement after every meeting and started to include an assessment of the balance of risk to achieving its objectives. From 2004, the Fed sped up the release of its meeting minutes to 3 weeks after its decisions. From 2007, it decided to release with every second decision a statement of economic projections, otherwise known as the SEP, the aggregated economic projections of the meeting participants with a mean and a median. In 2012 came the associated dot plot. This is a summary of each participant's unidentified estimates of the federal funds rate going forward. Since 2011, the Fed Chair has held a post-meeting press conference after every second meeting, and from 2018, Jay Powell increased that to a press conference after every meeting. Most other central banks have now followed the Fed's lead in having 8 interest rate settings per year, and have adopted other elements of the Fed's tendency toward greater transparency that came with the advent of Ben Bernanke to the chair in 2006. This is a sign of global respect for the Fed's processes and outcomes. That said, the Fed has not been immune to second guessing of its decisions and of suggestions of mission creep as well. One high-profile example was in 2011 with the resignation of Wall Street-connected board member Kevin Warsh, then just 40 years old, based on his opposition to a second round of Fed balance sheet expansion during the difficult period of economic transition during the Great Recession. Since his resignation in that earlier time, Warsh has been consistently and openly critical of the size of the Fed balance sheet and its management. Recently, the Fed has halted its balance sheet drawdown at a level deemed ample to fend off the risk of future crises being initiated or magnified by reserve scarcity. Now, Mr. Warsh has been nominated to the Fed chair from mid-2026. Should his nomination be confirmed, his capacity to guide the full committee on balance sheet size and management will be a core element of his chairmanship. Please let us know if you have any other topics that we should be covering in our Explainer series.